The Federal Reserve on Wednesday lifted its benchmark rate to between 1 and 1.25%. And as you all know by now, it's up to plans for one more rate hike in 2017. That market's fifth rate hike, well beyond what they say 3 steps in a stumble, where when the Fed hikes 3 times in a row, that often induces a market correction or outright bear. The Fed said that starting this year, they would gradually shrink its $4.5 trillion balance sheet. We talked about the details in this morning's PMP. At their indicated maximum of $50 billion a month, once they get to that level, it would still take a year to reduce the balance sheet by a mere 13% of the $4.5 trillion total. So this is a very long process. And there have been no signs of QE slowing outside of the U.S. Global central banks have bought $1.5 trillion in assets this year alone. And so that pushes the global total to $15.1 trillion. And at that pace, asset purchases would reach about $3.6 trillion this year. And that's about half of all asset purchases that were done over the last 5 years. So in other words, asset purchases seem to have actually accelerated, or at least they're certainly not decelerating. But we've talked about this. These banks have very little choice at this point. The bond fund legend Bill Gross has said these bubbles will burst if the pace of QE slows without having sufficient economic recovery in tandem. And so far, the recovery has been anemic at best. The yield curve has been flattening, which is one step from an inversion, which is, as we all know, the arbiter of bear markets. So the Fed would be foolish to hike rates again this year should the jobs data and GDP growth remain soft. Both are questionable at this point. GDP is showing signs of slowing. And normally the Fed would actually be doing the exact opposite right now to spur economic growth, but the fuel in the interest rate tank is still really, really low. And I mean, it's at 1 to 1.25%, so that's not really an option. And so the Fed's got to create reasons to justify why another rate hike is due. The argument Yellen has used is she believes will rise, so they have to remain vigilant. That's based on the Phillips curve, and that curve says that tight labor markets and inflation. And unemployment, according to government statistics, is at a 16-year low at 4.3%. Yet that percentage is highly suspect as it excludes the downtrodden who've given up looking for work. So it could be argued that she's basing her conclusions on misleading data. And but I mean, the Fed's grabbing at straws. They're going to use everything they can to justify their stance, their hawkish stance on rate hikes. So at any rate, as the Fed reduces its balance sheet, other central banks may have to pick up the slack. The ECB recently said that they made no indication that they're going to be slowing their pace of QE anytime soon. Global economic growth remains lackluster, and such a steep reduction in interest rates. When you think about it, we've had such a steep reduction since 2008, and that should have sparred far greater economic growth. And yet here we are several years later, almost a decade later, and we've got very little to show for it. Greenspan, Jim Rogers at Dakota, a number of others, they've all said that these are unprecedented times, and global debt of this magnitude has historically seen a calamitous finish. And Greenspan actually made a statement, I think it was last year, that this all cannot end well. But that said, bubbles do often grow well beyond what even the most liberal expectations are before finally bursting. So the key to sidestepping any massive correction is to keep your eye on the price volume action of your stocks. Markets have always left price volume clues ahead of such major corrections or crashes. And lastly, there is this so-called dot plot. There is almost no movement on it, and that just shows you that the Fed is just not rattled about the recent soft economic readings, or perhaps they're rattled, but they've got really no headroom to show that they're rattled, and they've got to maintain this brave face in light of everything. But yeah, these central bankers, they really are kind of clueless when it comes to setting interest rate policy. And history will show that when they hike too far, that induces major bear markets. It's happened again and again. So this time, I think especially, this bear market is long due. So it's just a matter of being vigilant to the opportunities as they present, because that kind of volatility will afford opportunities in both directions. Wanted to mention a couple names on the focus list. As you know, we took a bunch of names off. Many of the tech names were selling off hard earlier today, but now they're bouncing, being oversold. The FANG stocks, Amazon, Facebook, Apple, Google, etc. And this is the kind of situation where you want to look for undercut and rally patterns, or just bouncing off support. COHR is a name that's trying to bounce off its 50-day. Meanwhile, BABA has, well, it's also trying to get support there. It looks like it's bouncing. Here's one that was kind of a gray area case, Bison. It's a Chinese name. Yesterday, over the last few days, it shows that there's some support that comes in, so it often has a mid-bar close. But at today's open, where it's had this mini gap lower, you just want to, if you had any left, you want to be just selling it. And this is one that's most likely going to be removed from the list because it just hasn't been able to show muster. SQ is that's always been one of the leading stocks in terms of price performance, and it bounced, so far it's bounced nicely off its 20-day exponential. AAOI, that's one that has also bounced nicely off its 50-day. It's doing an undercut and rally. You look all the way back to the 18th of May. It's undercut that point and seems to want to move higher. This one also has a very interesting fundamental business model. So this is one to watch, or if you might have sat in it, you might have bought it on the undercut and rally here. But keep in mind that the market is nowhere near out of the woods. Yes, QE's a dominant factor, but it was also interesting to see a few days ago that the institutions were selling pretty hard these tech names. Arguably to buy the financials because of the Dodd-Frank adjustment, which is of course great for the financials. The XLF, which is the financials ETF, that has risen almost every day since then. But it's still, I would say that the tech damage is quite pronounced, and it would not be unwise to definitely keep your eye on your stops, keep them tight on any stocks that you might have reinitiated today. Don't assume that the market's just going to start baby stepping higher. It's done that every time this year. Well, it did that. If you look at the NASDAQ March 21st, that was when Trump's healthcare bill failed to pass. And then again on May 17th, that was the impeachment issue that arose. And you'll see on the NASDAQ that it just finds its footing immediately. And meaningful corrections, if you look at the NASDAQ or the S&P, what I thought what was last year, if you look at the S&P, was some of the quietest moves through a good part of the year, basically from April to about October. It was very quiet, and you'd have to strain to find an equally quiet period in the S&P. But this year has been, I don't want to say quiet, but let's say the corrections in the S&P have been absolutely minuscule. 3.3% has been the worst. So, and right now it looks like QE to the rescue once again as markets are getting propped. So anyway, keep fluid on this kind of market action because it is tricky. And but that doesn't mean there aren't profit opportunities like a couple of the ones I just cited. So from here, I guess we could start talking about some other names or any questions.
Actually, there are no questions. Everybody's just kind of agape, I'm sure. But I think we can begin at the beginning. And if you guys were attending last week's webinar on Friday in real time, you can even go back and review that. But we pegged the rollover early in the day in the NASDAQ before things got out of control. The NASDAQ was down 8 while we were doing the webinar last week. And I think, what was the final tally by the close? The thing just kind of blew apart and came down, like, I think at one point it was down over 150, something like that. I don't know. But but we saw that happening in real time, and you go back and review that the video of that webinar, and so there you were, So, I don't know what else to say other than the fact that if you've been sitting there long, you've had your head beaten in, okay? But I saw it, and I told you guys I went to cash, boom, I'm gone. That's it. No questions asked.
Well, it was interesting because while I was giving the intro, the market started selling off really hard.
Yeah, all of a sudden.
And I remember I started looking at a couple of I had a couple stocks in there, and one sell stop got tagged, and the other got tagged later on. So there's nothing to do but to sell.
Yeah,
that's all you can do.
I mean, this was
more mass.
This was one I had that day, and basically I was buying it right at the 10-day line, and it started to come off a little bit, and I just dumped it. And so I ended up down, I don't know, 50 cents or so on the stock on the day, and it ended up down 11%. So that would have been a pretty brutal hit to take, trying to buy a stock that you think is acting very quietly along the 10-day moving average. So if you bailed out and went short, you scored there. And then, of course, on Monday, we saw, well, let me see. Let me get this pen straightened out here. If you see this, on Monday what we did, it looked like, okay, we did get an undercut and rally. You undercut this low on Friday, and then on Monday we gapped down again. And that kind of reset the undercut and rally, and you rally up into the 20-day, 10-day moving average on the NASDAQ, and then, of course, from there you rolled over yesterday. But that was a weak rally, and I know people were talking about, well, tech has rebounded, and it's all, everything's back to normal. Continue buying stocks, whatever, I don't know. But at that point, you got the rallies in a number of names. Hold on a second here. I'm getting some alerts here. This is really tricky. I mean, I see some undercut and rally moves, but I don't see anything that really, I don't know. This is tough.
Yeah. What also makes it tough is that you got this argument, okay, well, there was a rotation in the financials. I mean, you could see a lot of institutions piling in.
Yeah, that's
piling out.
Yeah.
But on the other hand, well, also there was the issue, that markets don't really want to correct, so maybe that's the extent of the correction. S&P didn't really correct at all.
Right.
And so that gives people more of a incentive to try to get in during those 2 days when the market was off, when the NASDAQ was off. It's easy, and then it bounces, and then you look at it and you go, well, it's on lower volume. But if you look at the bounces in all the other cases, it's always on lower volume too, and then it leads to markets that baby step their way higher. So I could see someone rationalizing, okay, well, we're going to eventually just go higher from here. Obviously the last couple of days, if you're sitting in names, they got hit very hard. So hopefully you were a seller that first day when that action took place. And then you would come in today and maybe look at some of these undercut rally moves. But it's certainly been tricky, no doubt.
Yeah, and you notice today the Nasdaq just barely undercut Monday's low, and now it's trying to bounce. But I'm not so sure this means that everything's going to turn and rally here. It seems like it's sort of like a little bit of this, a little bit of that. You could just kind of do this little boom and then break lower. So it's you're actually in a dangerous position here. And I think unless you're going to be nimble and try and trade some stocks, it's going to be very difficult to just buy some stuff and sit. You could set yourself up for some serious damage if everything keeps rolling over, because it's just kind of nutty right now, and things chop around, and it's very difficult to get a handle on things, other than the fact that all I know is all of these tech names that were acting so well earlier, they're all out the window. And you can just go through several of these. Facebook, here's basically what you have here on its face is a breakout failure, because it breaks out of this base here and it fails. So you get the failure on heavy volume. You rally up in the 10-day to 20-day, and that becomes a potential short sale point. And then boom, there you go. So, a lot of these, I was working short yesterday, and then the market broke hard, so I took some profits. Obviously, I probably should have kept them because we gapped down again today, but I mean, that was a fat move. The Nasdaq went down 60 points and nothing flat, and a lot of these things broke hard, and so that was a pretty fat move to bring out of the market. And I find that most of the time when I'm trading, if I take a position, I get a nice sharp move in it. A lot of times it makes sense to take it either way, because the market just is very erratic and seems to scoot back and forth on a moment's notice, and I think that makes it very dangerous that way. But that's one example of a big stock Nasdaq name that was a short yesterday. Amazon also, same situation, almost exactly the same. It stalls out at the 20-day line, and then it rolls over. Now we hit the 50-day moving average this morning. That's why when I saw a lot of these happening earlier, I was long the UVXY. I had the SQQQ, which also is pretty profitable. That's another way to play the breakdown in techs, is just buy the SQQQ. I think that was up $1 or so today at the highs, and then now we're starting to come off again. So you're not out of the woods here, but you can see there's a logical reason for the stock to bounce, because it hits the 50-day moving average. But again, you had a break and then a rally up to the 20-day. It becomes shortable right there. Okay, and you'll see this in a lot of different names. For example, let's look at Google was another one. And you had a big break, and of course, and look at this, almost is exactly like Amazon in the sense that it broke off the highs, and then it bounced, it undercut this low, see that? And you get an undercut and rally, you rally into the 20-day, you run out of gas because the volume lightens up, and then boom, you gap to the downside. But notice how they gap it down today. So unless you were short and holding it overnight, you're not going to participate in that move. And if you come piling in on the short side today, then you might get slapped around a bit. And that's what makes even shorting this market difficult, because unless you're going to hold things overnight, and I got to tell you, I don't hold big positions overnight. I don't hold anything on margin overnight. I'm not on margin overnight, because I think that they can manipulate the futures all they want, and the market could gap up or gap down the next day, depending on where all the QEs lined up. And that's what makes this market so tricky and also dangerous, because things can gap hard one way or another on you overnight. And even on the long side, I'm more content to campaign stocks, buy them, and if I get a move out of it that day, I might sell into the close and then look to just buy it back the next morning if it's hanging out where I sold it. Sometimes, a lot of times, you might be 20 or 30 cents lower, and I find that to be the case quite often. So that's that situation, but it's very, very dangerous. So we can see Google was short at the 20-day line. So is Microsoft, and it's starting to fail on a breakout attempt here. You can see that. Let me just kind of make these a little bit bigger, but you can see it. But it bounces off a position near the 50-day moving average, and it's rallying this now, but this rally may be done. So if you catch some of these rallies, it may just be a day trade, and right now that's looking like all it is to me. So I'm still long some UVXY. That's a great hedge because you don't need a lot, and I bought it yesterday again. I traded the position I had last week. You guys might remember I bought 35,000 shares at 35.02. And that thing ran up very quickly, and let's see if I can go back to that and just show you how that was played out that day. Let's see, what day was that? June what? 6th? Was it the 6th? I forget. No, I'm sorry. The 9th? Was it the 9th? It was the 9th. 6.8. Let's go. We got to go to UVXY, then I'll be able to figure out what the hell's going on here. Here we go. So let's see, 6.14. Let's go back. The 12th would have been Monday. So here we go. Yeah, and so here we were. Yeah, here it is. Right here. I mean, this is actually when we were doing the webinar between 9 and 10, and I bought it in here, and the thing just launched. And you can see what happened here is that it basically went parabolic for the rest of the day, and you're up to 1140. So you're up $1.40, 14% on this thing, and I'm up, on 35,000 shares. That's a little bit of lunch money there. But at that point, it's getting really extended. And notice how you get a MACD stretching across here, but the stock, UVXY holds a 6-period line, which is the orange line right here. So it never violates it. So what I'll do is if I start seeing a MACD stretch, I'm keen on this. And a close below that line would probably have me out in a jiffy. But instead, it kept going. So it rides up. And then that's just kind of an extreme move. So you sell some into that, and then as it starts to come in, then you just dump most of it. I think I held 15,000 the next day. We opened up roughly flat and dumped the rest of it. And then we come in, bought it yesterday around the same price, and we got a nice move after hours. And this morning we opened up at 11, and now it's trying to round out again. So I still am long and saying, but I'm going to hold it because I'm not long anything right now. I just unloaded all my longs just a little bit before this webinar, but those are all day trades. And so you can see how I'll use the 620 chart to handle the UVXY, and that's the way I trade it. I don't need to use a model or anything that has magic signals. I just watch I use the context of the market in conjunction with the 620 on the UVXY, and I can trade it that way, and it works pretty well, so I have to say. Let's see, Dow's off 46. I'm not saying tech stocks seem to be hanging in there. Looking down my list, they're not coming up. Like double AOI is unched, or actually slightly up, 21 cents. So, whoops, got to get that right. Tangled fingers. It's holding up. So maybe they're coming after the other stocks, and that could be the case because what happens is that they've been selling off Nasdaq names hard, and so now they can rally Nasdaq names and get some support out of that area of the market, which gives, it's visually or optically, shall we say, no pun intended, constructive looking. And so meanwhile, they'll be selling off everything else. It looks like the market's under some sort of weird distribution, but it's really hard to peg. So let's see, I'm noticing, here's one that I actually like. Nutanix is hopping off the 50-day line. Volume is dried up severely on that one. Look at now. Is undercutting the prior low here, and it's above the 100 level, so this might try and push out of here. The Dow's off 45, though. The Nasdaq's holding down minus 56. It's not really selling off as the Dow sells off, so that might be something that just telling you you're going to get a divergence here between the Nasdaq names and now the NYSE names, whereas you had a divergence between Nasdaq names on the downside as NYSE names or NYSE index like the S&P 500 and the Dow traded up. So yeah, somebody likes this NTNX, I'm noticing. That's not me buying it, so I don't know what's going on there. But, again, that could go up 20 cents and then just roll right back. Notice another one that looks interesting here is Advanced Micro. It undercuts, it gaps down and undercuts the slow. Now it's trying to pitch back above. So I think Light looks okay. Lumentum. Notice how that's actually holding up at 61.50. It actually came off. This is one I bought lower and then just sold it a little while ago, right around 61.50. And note that it's holding, which may be constructive, although I'd say, you probably need to put some more time in here. But that was a good trade off lows. But I'm noticing that it's not budging, even though the Dow is now down 48. S&P back down 12.50. I don't know if those are the lows for the day. Now we're still well off the lows. So, everything is in flux. Who knows what the hell's going on here. Somebody says, loved your VIX calculation for newbies. Yeah, I threw up the equation for calculating the VIX. And then, of course, there's always some wise guy who says, well, it's actually the square root of that equation. But what he didn't know is that we're using that equation for our new highly innovative X squared VIX ETF, which actually will emulate the performance of the VIX squared. So, you know, it's a real hot, spicy meatball there for you. Anyways, that was a joke. Just want to make that clear. Let's see. I'll look at just, you know, Trivago. I mean, I think we should go down the list here of, whoops. It still seems really unstable. I'm just watching things trade. They move a little bit, they come back in. Trivago's hanging in there. That looks okay. Maybe it's coming. Notice how it's holding along the lows of the base. Maybe that would turn with the market. But let's go through some of the. I think we removed a bunch of these from the list, and we probably could have been quicker on that. I think, but whatever. I suppose better late than never, maybe. But Applied Opto finding support. Amazon finding support at the 50-day line. So maybe that's a point that it will hold. You know, I don't know. BABA hit the 10-day line.
I just wanted to mention, some of these names are more thematic. So, you know, some of these names in prior lists, we've kept on for a while, even though they might correct to the 50-day, just because they're kept on there for a thematic basis. So it's more of a longer-term hold. But that said, as we always advise members, you know, just because they're on the list doesn't mean you sit and hold them. It's not a buy and hold list. It's a tradable list. So I wanted to make that clear, because some of these things will correct, you know, well beyond your sell stop, or any reasonable person's sell stop. So you should not ever be sitting and holding any of these names as a general rule. Use your own discretion.
Yeah, and a lot of these names have been on the list almost the entire year, and they've had a tremendous gains. BABA is obviously a clear example, because we've had that on since it cleared the 100 level way back in January. And I know we get new subscribers. You know, new subscribers will always show up when the market's like streaking higher, because they're always late to the party. And then they say, well, I'm not getting any value out of this. Well, yeah, that's because you're late, dude. You know, if you were here in January and watching when we're putting names on just as they're getting going, that's where you want to be subscribing, you know, not after everything's already up. But it's inevitable that you see a bunch of new subscribers show up after the market's been up for a while, and then they wonder why they're not making money. But that, you know, they're idiots, because somehow they expect that even after the market's extended, you're going to find a lot of great movers. And admittedly, we do find some, like the big gap in BABA. But notice this is starting to fail here. I thought the trade off the 10-day line earlier was very nice, but it's starting to move back to the lows of the day and back towards the 10-day line. It's dropped below this 135, what is it, 135.21 low on the BGU, and so that's starting to fail. So that looks troublesome, and you'll notice that a lot of the Chinese names have run into trouble lately, and we'll go through the list here as we go through it. Box was taken off. You know, this thing, the way I looked at it, it needed to hold the 10-day line. If it couldn't hold the 10-day line on the pullback, then you just gone, and now it's just a mess. So that one's off the list. Bowsen is holding along the lows here, but it's just down there. Yeah, you could get a reaction bounce back up towards the 20-day line, but it's looking pretty sloppy, and it's hard to say, yeah, you need to buy this here. You know, maybe you get an undercut and rally through this low here, and that becomes playable. I think it might have tried to pull that earlier, but it failed. So, and the beauty of playing these undercut and rallies is that, okay, so if the low here is 1981, we actually hit a high of 1988. So let's say you bought it as it's coming up to 1981. If it doesn't hold, you're gone. And that's pretty simple. So that's how you would play it. Now it's trying to stabilize. I don't know. Now it just looks like a mess. Chemours Company, CC, that thing's violated the 50-day line, and that was removed. Notice how it's just kind of in no man's land. But then, of course, you do have the potential for undercut and rally moves if it can get back above these lows. Notice how it tried to earlier in the day, but no go. So that's not a good sign. Usually what you'll see is if the market's oversold and it's going to bounce and you'll see a bunch of undercut and rally moves, usually they'll move out and move up pretty fast and get out of there. And I think you're seeing like just a big intraday fake out today that's screwing with everybody's heads. I think it's probably tradable on a short-term basis, as a day trade, but trying to use it as an entry for a longer-term hold on some of these, I think, is a dangerous proposition. And because I'm not convinced that we're not going into a steeper correction or bear market. Listening to Janet Yellen yesterday, I just think she's such a joke. The whole thing is a joke. The economy's resilient, and she's like, we're taking a victory lap, like QE has worked. Sure it has. We had 8 years of $10 trillion pumped into the economy, and we get 1.2% growth as the government measures it, which is probably negative growth, for all we know. Anyways, let's see.
You know what they used to say, actually. Joseph Goebbels used to say this: if you repeat a lie enough times, people will believe it.
Yeah, and you listen to these idiots on financial cable TV like CNBC and Fox Business, and they're all taking the whole hook, line, and sinker on that thing. Oh, the economy is strong, and also all the analysts out there that work for the big firms, because they all have a stake in towing the party line and keeping the masses, smoking the soma or whatever it was. If anybody remembers Aldous Huxley in the book, I think it was Utopia, where everybody takes soma and it helps them all feel good and nobody thinks, and that's kind of where we're at. I think the current form of soma would be
Brave New World.
What? Brave New World. Yeah, thank you. I remember reading that book in a utopian literature class at Stanford. Anyways, let's see, where were we? Coherent has become somewhat incoherent over the past few days, and it's broken down to the 50-day line. Is that support? Maybe it is. We'll find out, but it's not doing anything in terms of bouncing. You notice it opened up here, it traded lower, bounced off the line, and now it's not really getting any thrust off the line, and we'll just see what happens. Was that taken off the list, or did we leave it on?
That was a gray area one, because it's held pretty tight, and well, last time it hit the 50, it got support, but we'll see.
And then we have fake.
It could be a lot of point,
which I talked about. It's kind of a late-stage base failure. The thing with Facebook is it's selling at like 20 times next year's earnings, so it's not like it's expensive. So remember what I talk about, institutional money managers, their number one goal in life is to not get fired. So, Facebook at 20 times next year's estimates, you buy that, you're not really going to get fired, although somebody was dumping it pretty nicely last week and on Monday, and then now it's just kind of drifted back into 20-day and rolled back. Now it's holding the 50-day today, but I don't see this, this is neither here nor there. I don't know. Would I buy it? I don't know. It's just, I think you're just in a danger zone, so I'm just going to sit here. All I've got is my little UVXY position that I'm up on today, and we'll see what happens. If it doesn't work, it doesn't work. I can always go away. But I'm not so sure I need to dive into a whole bunch of stocks here. You were saying, Dr. K? No, that was a dog. Sorry, that was a dog. Whose dog is
that's the sound actually, like just on the beach, it really carries because the windows are wide open.
Yeah, that's pretty interesting. Okay, good thing people aren't doing other things out there. Anyways, let's see, where were we? Oh yeah, JD we removed. Now this was, it's all the way down at the 50-day line. So, are we in position for a bounce on some of these? Probably, but if the other option is that they just keep going down. If any of you guys were around in March of 2000, stocks just busted apart and kept going lower. They didn't pay attention to support. So, who knows? Are you going to step in and buy this thing? I don't know. You better be pretty brave here and nimble, I guess. But it's trying to hold the 50-day line. But this was one I shorted last week. It moved up with BABA on this day, gapped up, and then reversed and closed near the lows down here on that day, and then opened up the next day. I shorted it on Friday. That was a week ago, not quite a week ago, and it just blew apart. Then it rallies back into the 20-day and becomes shortable again, and then it blows back to the downside. So, this thing looks like crap. And even if it does, it's broken below the low of the BGU. So, I mean, it's a mess, and at best it's going to need to set up. Now, if you were smart and you bought it way back when we first started talking about it, of course, you get the idiots who said, oh, I'm not getting any value out of your service. Well, that's because you're late, pal. and you're not too smart if you're running in now. But for those of you who bought it when we were first talking about it down along the 26 level, okay, you've got a pretty nice profit in it, so you can either afford to hang out and see what it does or use a 50-day line as your final selling guide. I guarantee you, though, if you wait for a 50-day moving average violation, the turkey is going to turn around on you and end up jacking to the upside from there. So I'm still watching the names that I've got my eyes on here. The Nutanix is actually up a penny now, so that's not looking too bad. Light is holding in at 61.55. Now is another one I've got my eye on. Well, we'll go through some of these as we get to go through the list here. Let's see. Lumentum, that was the one. That seems to be acting okay. But notice, NASDAQ's still down 57, so you really don't know. You could get a sudden sell-off. And remember, last Friday, that's the sort of thing that puts the fear of God in you because stocks just suddenly blew apart. And it was sudden. I'm curious, how many of you sat there and watched your stocks come down 10, 7, 8, 9, 10% or more on Friday? A few of you? I bet you a few. I bet you did, Scotty. Right? Am I right? Maybe you had some that held up. But in any case, I'm sure a lot of people might have just sat there. But the fury with which they sold everything was mind-boggling. And it'll definitely put the fear of God in you, or at least the fear of selling algos. And they come out of nowhere and they just rip you apart, And that's all very disconcerting, shall we say, at best. But Light is hanging in there, but the only thing here is that you've got a base that it broke out of down here. I guess you could say this is where it broke out, right in here. So you could get a retest here. So the volume's Light. It's holding along a 10-day line. That looks constructive, but the way that thing broke the other day, that was another one I was long and sold it, and it just came apart, and I'm glad I did. I figured out if I had held everything I was long that morning, I would have been down close to 15, 16% in one day. That's because I would be long heavy positions, but it would have been a brutal day if I wasn't quick getting out. As it turned out, I made money that day, which was nice, but it could have gotten very ugly. Momo is just, I think that's off the list now. It's violating the 50-day, but it's undercutting these lows. Maybe it pulls an undercut and rally. You could watch for that, but we'll just see. Netflix is off the list too, but this is pathetic, and this just shows you again how dangerous this market is. It works its way higher after over a month and a half roughly, and then El Kabong hits the stock and it breaks in 2 days, boom, and you're basically down close to 20 points, over 10% in 2 days, just like that, giving up a whole month and a half worth of gains, and that's pretty grim. That's pretty brutal. And that's something I wouldn't want to sit with, frankly. And there's no real reason to be buying it now because it doesn't seem, it has tried to undercut this low and rally 3 days in a row, the past 3 days, and then it's failed every time. So it's basically a short every time it did that. And then you gap down to lower lows, you undercut this low, you're trying to rally above it. So I don't know if it's going to try and rally back to the 50-day. Maybe it does, maybe it doesn't. I don't know. But am I going to try and play it? I don't know. We're getting to Tesla. Just relax. I'm trying to go through the whole list. Now here's Now. This is holding up 100 and change. And I don't know. It's undercut and rally. So you undercut this low at 99.50. You're trading 150 now. So, I mean, you could try this and see if you get some kind of a continued rally up to the 20-day. That's a possibility, I guess. So, but like I said, I'm not so sure I trust any of this stuff.
Yeah, so there's a lot of noise in a lot of these patterns, which implies, it could be multi-directional. So, these patterns, if you're going to trade them, they strike me as day trades at best.
Yeah, we'll see. No, light's now moving up 61.95. So that was funny. I just picked some up at 61.60 and took back my position and kicked it higher. So I don't know what that means, but now it looks okay. I think you might get a rally. You know, I've actually pulled off some trades and entered some stocks. Re-entered some stocks I was in before. So we'll see what happens. I don't know. I'm not holding my breath. So if they start to get in trouble, I'm out fast. Okay, let's go through some more names. But again, you are in position where you could bounce. So if you're oriented towards day trading or short-term trading, that's a possibility. So. All right, let's see. NVIDIA is hanging along the 10-day line, so that's actually not blowing apart, and you might consider this one of the better acting names after getting whacked very nicely on this day where it reversed off the peak on a big outside reversal, but now it's stabilizing, volume's drying up, it's holding along the 10-day. Maybe it tries to go higher. I don't know. We'll see. Snap, we took off. That's a piece of garbage. Square holding the 20-day line. At best, this looks like it needs to bounce. Now we're down 24 on the Dow, so we might turn here. I don't know. I took some positions back, 3 of them. We'll see if that works. So that's basically light now, and also I took some Nutanix here. We'll see what happens. Got to stay green for me though. Let's see. Sedge looks interesting here too. That's another one, but I want to go through this. So you're holding support here. Maybe you build a base. Trivago, I think, looks interesting as well. And it's actually hanging along the lows of its base. It found support near the 18 level today, so that looks good. Let's see. I'm going to buy a little bit of Trivago there. 1860 I got filled. Yeah, so now I'm getting some traction here. The now is moving up. I picked up a little over 143, I think it was. Now we're 164. Dow's down 17. Yeah, we might turn here. So I'm playing it that way. I just sold my UVXY too. We'll see if I want to come back into that later. But anyways, we'll see what happens here. Still in flux. Still in flux. Someone says masses equal useful idiots. Indeed. But yeah, I think that the bottom line with this market, if you're a trader, I think the volatility is great. But you have to be nimble, and I think the real wild card and why these markets continue to rally is the simple fact that you just have all this money out there, and every time the market comes in, one way or another, they find something to jump into. And I guess we'll just find out where that all leads. But in the meantime, it's pretty choppy. Now the Nasdaq's starting to come off the lows, minus 51.67. So if we look at the 620 here, you can see that we're coming up off the lows. And you're actually starting to get a 620 buy signal. So we might see some movement in some of these off the lows and push higher. Let's hope so, because I'm long now, so we'll see. That doesn't mean I will be going into close. I could disappear in a hurry. So, but now light moving up above 62. That could be good for a trade back up to the 64. What were the prior highs on that turkey? Lighten up. 65. Yeah, that would be a nice trade. Let's see. Somebody asked about Triple D. I noticed this guy is holding pretty well, and we talked about this, but can you guys see the setup here that actually worked? And namely, that was the undercut and rally here. So you could have come into it there, and now it's back above the 20-day moving average. If you like it, maybe it's going to turn and continue above. But I think the place really to buy it was the 10-day and the 20-day moving average. So, anyways, let's see. I want to get through the list here. What time is it? 9:40. We're almost through. What time do we start? Do we start right at?
A couple minutes after.
Okay. But you can see just how funky this market is. It's just funky. Excessively funky, I guess. Let's see. Tesla, somebody's asking about Tesla, so here you go. Here's your Tesla. I don't know, why anyone would ask us about this, but it's just up there. It got a buy recommendation yesterday with a 450 40-something or $30-something target, which I thought was kind of rich. But hey, if you're long the stock, you'll take it. What I noticed yesterday was that you had this big volume. It traded up on that recommendation. It sort of churned around, but Tesla's just chewing up shorts. I mean, people come into this thing and they just keep shorting it. And I don't know what drugs they're on, but you know, it's got to break down somewhere. And I guess the idea is that, oh, it's eventually going to, you know, reverse, and that's going to be the end of the world for Tesla, and it's going to go like this, you know, to the downside. And I don't think that's how it's going to happen. Now with so many idiots just continually shorting it, and they're gluttons for punishment as far as I'm concerned. Travaga's moving 1871 now. How about Sedge? This one looks interesting. We'll see what happens here. I got to check something on this real quick. Yeah, that could work. I could also get pummeled. We'll see what happens. But anyways, Tesla's not in a buy position. But by the same token, if you own it, you don't even have a break of the 10-day line, so you don't really have to do anything. And you know, I was thinking maybe if you saw this sort of like stalling day up at the peak, that maybe that meant that the thing was going to come in, and it did today, but it's not really breaking down, you know. So we'll see what happens here. BBRY is another one. I don't know. Somebody's asking about that. Well, I mean, that's undercutting this low, so I guess you would watch for an undercut and rally. What's the last trade? 1034. Oh, that's BlackBerry. Low here is 1044, and you're trading right now 1034. So, I mean, if you like this name, then I guess you would look for an undercut and rally type of move back up through that low, and then maybe you come after it. So I guess that they're just killing a bunch of shorts on this thing. Is that the deal? Bum, bum, bum. Spewer also looks interesting down here, but it's, I don't know, it's, nah, I take that back. I don't like this one. I think I'd rather have Sedge. Sedge is the ticket there. I like the way it holds the 10-day line. 1896, you're up, what, 38 cents from there? No, 36 cents from there, so that's pretty tight. I think the now looks pretty decent here. I'm long that, so it's starting to pitch. Yeah, that could move. Yeah, just as I say that, they tagged the bid there, but it looks like it's holding up. Your stop would be 99.50, so that's not too far from here. Let's see. Any other questions? I noticed if you're looking at DDD, also SSYS, Stratasys, holding at the 50-day line, that may be a possibility. But like I said, if you're going to try any of these stocks on the long side, then you had probably better have some tight stops in mind if they don't work out. But that said, they could work out pretty well, especially if we see the market turn green. I mean, let's say the market, because yesterday I remember we saw the NASDAQ was down 60 at the lows, and then by the close it was only down, what, 24, 25 or something like 26, 27, somewhere in the 20s, I forget. But it turned pretty fast off the lows, so you could see that again today. Let's see, First Solar I think looks like SunPower, so I don't really see anything here I like. I would have bought this off the 10-day line or the 20-day line, but it can't hold, so guess what? I wouldn't be touching it with a 10-foot pole. End of story. So, what's ASUR? ASUR. Asure Software, I don't know, cheap little name, trades 139,000 shares a day. Not one I would traffic in, so I don't know. If you like it, go for it, but it doesn't really thrill me. All right, light turning green now. Here we go. I'm long only 40,000 shares, but no, I'm kidding. Not like that. The last week's UVXY position, 35,000 shares, sounds like a lot, but percentage-wise, it's not that big. Okay, here goes light. Maybe we're up $3 with it today. Looking for now to turn. So, okay, I'm going to say the way things are trading, I think we're going to turn green on the Dow, and you may see the NASDAQ come off the lows. That's what I think. So maybe I'm wrong, but that's my thinking. AAXN. Well, I don't know. Maybe it's posting a pocket pivot. Axon Enterprise. I've heard of this one. What does this guy do?
They work with law enforcement to develop electronic control devices.
Sounds interesting.
Also for the military and corrections market. So yeah.
Corrections.
Probably
like market corrections. No, I'm just kidding.
Prison corrections. But yeah, it's interesting technology, and the pattern is kind of sloppy.
Yeah, there goes light. Kaboom. Okay. It's the old taser. Oh, AAXN is the old taser. Okay. Well, I didn't know that. You learn something new every day. So that one looks interesting. That might be one that's going to play well, where they're going to do 50 cents. That's a good one, Scotty. You're on today, I guess, huh? Here we go. All right, we're getting some traction now. I'm starting to feel the love. Okay, you know, that's pretty interesting. Are we on track to do a pocket pivot today, Dr. K? Well, now volume's 56% below. Well, wait a minute. It wouldn't take much to get up there if it accelerates. If you guys all start jumping in and buying it, it will probably cruise higher. So,
well, it'll give the volume for a pocket pivot as well.
Yeah. So just so you guys know, I'm
1,000. So it's not gonna, yeah, it's not gonna beat it today.
not a barn burner. Okay.
It's right up to 200.
All right.
This is sloppy overall pattern, but it looks like a swing trade. I want to do that.
So you know, all you newbies, the green stuff you see on my screen is a screensaver of what was actually a big California sage, a bush of California sage a few months ago after it rained, and I just thought it was the most beautiful thing I've ever seen. The fragrance was amazing, but let's see if I can make it happen again. Nah, it's not going to do it. Anyways, but I use that. I took a picture and I use it as my screensaver. So anyways, yeah, look at the light is starting to come up. That's moving nicely. So just give you guys, you know, what I'm seeing on the light was you had I actually was buying it down here, so I had a little cushion in there already, and then I sold it up here, and then I noticed it's holding on the 620, and you never got a sell signal, so I just bought it back right here real quick, and I guess, you know, my order triggered all the algos because now they're all sucking it up and taking it higher. But we'll see what happens if I end up trading this or not. Another one to look at here, I think also is working, is now, because it looks like you've put in a possible low. You undercut the low here. You can see this. And you're back above the 20-period line. So you undercut this low here, and you turn back up. And now you're holding above the 20-period line. So I'll kind of use that as a selling guide if it looks like it might be getting into trouble. But right now it looks viable, and I'll stay with that until I see something break on it. But for now, what I'm looking at now, and you guys probably see this, is that the 6-period line is starting to push up, so it may push into a buy signal. So, and like I said, it looks to me like they're going to turn this green, or at least the Dow and the S&P 500. Maybe the NASDAQ will turn, because you are getting something of an oversold situation there that could create a sharper rally. Now, that doesn't mean we're out of the woods and the market's just going to turn back to the highs. But we'll see what happens. It's a fluid situation. I'm nimble, and I fear nothing. So let's see. It always helps to have deep pockets too. But what else? Any other fantastic questions as we wrap it up here? So I don't know. I hope you guys are getting some ideas here about what you might be able to nibble on the long side, but I think, you know, if you're going to do it, you better be quick. That's all I have to say, and ready to jump out. So what I'll do is when I take positions, they start to move up on me, I'll pick a spot 30, 40 cents lower, set an alert. If that alert goes off, I'll probably just unload it. So like for now, I'm looking for that. And actually that may sound like I said for now, but I meant for the stock now. I'm looking for this to hold a 20 period, and at the very least I think you can use the 100 level rather than this level down at 99. I think the intraday low is 99.50 here. That's what it's showing on my chart, and that you know, could head back to a 20-day line. You get a nice trade up to 103. You know, you buy 5,000 shares or something, and you pick up 15 grand. That'll buy you some sushi lunch. Let's see, what else? I'm going to go through some other names I'm looking at. Baba's not looking so good, but you know, the whole the whole China complex, I guess we'll call it that, you know, like the oil complex or something. Okay. All the Chinese names have looked kind of crappy. Weibo, but notice here Weibo is undercut. This might even be playable here. It undercut this low and it's rallying. So that low is what? Low of 69.54. We're trading 70, well, 71 now. So it undercut that and turned higher. So maybe if you like that stock, that's one to look at. Yeah, 62.40, 62.30 bid on light. That's looking pretty decent. Let's see if we're getting a 620 buy signal now on now. Just about crossing. You guys see that, right? You're just starting to cross. Make it bigger. There we go. So you see that? But yeah, we'll see what happens. But this stock I know can get some velocity going, having played it in various directions over time. Let's see. I did want to check on Trivago. What you can see here is you had a 620 buy signal, but then it failed, and now it's turned back up through on a buy signal in here. But I could see that sort of happening already. I was buying it on the basis of what I was seeing here. You undercut this low, and so as it came up in here, that was probably me pushing it right there. I don't know, because I bought a decent amount, I mean, for this stock. And so that pushes it higher. Anybody have any more questions? Interesting. So in real time, we see things start to liven up here, and I go long some names. Last week, at the beginning of the webinar, we could see things starting to break down, and I bailed out of my longs and went short, and that was a very nice day. So we'll see if we get some kind of a turn. Dow's down 28, 27, S&P down 9, Nasdaq's down 47. So you could turn off the lows. I mean, you are down there, and you're in this sort of shaky shakeout land, you know, and so you could be in a position to turn. Nasdaq's down 45 now. So, yeah, I mean, it looks like it's trying to happen. So we'll see what happens. Any other questions before we sign off, you guys? Last questions. Last call for alcohol. All right, good enough. Well, we'll see what happens. You know, I think, again, the undercut and rally setup is your most potent weapon in this kind of situation where you have the market coming down and you have all these names just busting hard. And that's one of the reasons why I'm quick to sell off the peak last Friday and get some cash in my pocket, because then I'm in a position to just look at how things are trading and trade them on the basis of what I'm seeing rather than what I think I should be seeing. You know, I mean, it's real. I know a lot of people wanted to be bearish today. I thought we might break completely apart, but we're not. Okay, so, you know, register that one. and act accordingly. So when I see that it's not breaking apart, then I'm looking around for undercut and rally setups, and I found several this morning, traded some of them, got some cushion under that I bailed out. They held when the market on the Dow went down over 50 right now. I noticed that. You guys may have picked that up as I was talking. And I come right back into my positions, and in some cases I'm buying them just a pinch lower, and in some cases just a pinch higher. And some like Trivago are just fresh entries. Sedge also, Nutanix. So we'll see what transpires. So down 23 on the Dow. You guys, you got your marching orders. That's all I have. You finished, Dr. K? Anything else to add?
Yeah, I think we've said it all, and just remain fluid, especially in this kind of environment where we could undercut and rally on the Nasdaq. We could roll over again. But right now things are looking better as this webinar progresses in terms of the May starting to turn up, and also the been tracking the FANG stock, Amazon and Apple, and there's definitely some volume coming into Amazon right now on the upside.
Yeah, definitely. So that even comes into a viable position. So. So yeah, so you got to just watch what's happening and act accordingly. But I find in this market, even if you see a stock, like Netflix or Amazon, and it's streaking higher, and you're thinking, damn, why don't I own that thing? If you hang back and if you have a pocket full of kryptonite and cash on a day when the market is getting slammed, you're not being hurt because you're sitting there and you've got money in your pocket, and you can think clearly and you can take advantage of situations, especially on pullbacks. Because like I said already, your most potent weapon in a pullback situation like this is the undercut and rally setup, and I love to use that one liberally. And if they don't work, they don't work. But the beauty of an undercut and rally setup, every time, and I'm going to use Netflix as a example, and this is how you trade them. Very simple. There's no shakeout-plus-three garbage, which is just the biggest pile of BS I've ever heard. But you take the low. Here, there's your low. Once you move above that low, so you can see Netflix opened here, moved down, and then turned back up. Once it comes above that low, which I think is at 128, if I recall correctly, like 128.35, you can buy it and then use that as a stop. You might give it 30 or 40 cents below it, which isn't very much at all. And you come into it right there, boom. And it may work quickly, it may hang out a little bit, it may flip around a little bit, but that's your entry, and your exit is if it cannot hold that low. So, a situation, for instance, then like BABA real quickly. This actually did turn, it tried to turn above this low earlier, and it didn't hold. And now it's actually trying again. So, maybe it does kind of hop. So Trivago's moving higher, 1874. Looking good. So anyways, that's all we got, you guys. Thanks for showing up. Have a great weekend. I guess we did this today is Thursday, so so have a great Friday. Tomorrow is Aloha Friday, so we drink martinis on Aloha Friday, but well, we drink them any day of the week. But anyways, have a great Friday. Have a great weekend. We'll catch you next week. Take care.
So long, everyone.